Hello everyone. I hope all of you all are doing very good. So today we are here for our first live session of your paper 2 corporate and other laws. Now all of you all must be knowing this already that we are going to cover some very important parts from your Companies Act. Now it is very small time until your exams. So, what have we planned for these 4 weeks until your exams is that we will cover almost maximum important topics from the Companies Act so that it will help you in your very quick revision. This is your last minute, and I do not want you to start with anything new right now. All you should be doing right now is focus on what is how your revision is happening. So today we will start with chapter 2 of the Companies Act, and we'll do the entire summarized revision of this chapter. And we are not going to miss upon any point, and we will cover the entire chapter today. Now, similarly, there are 3 more weeks until your examination. So, in the remaining 3 weeks, again, we will take up some few more important topics, and from those topics, we'll do a very good revision, so which will make you exam ready. So, let's begin with today's session, wherein we are going to discuss about chapter 2, Incorporation of Company and Matters Incidental thereto. Now, when I talk about chapter 2, Incorporation of Company, as all of you all know, this is one chapter from which questions are asked in examination every now and then. This is one topic which is the base of the Companies Act, and questions from this topic are definitely asked in examination. And you can check the examination flow and paper pattern also, and what is the past exam analysis. We have done a thorough discussion on it. Now moving ahead and starting with your chapter 2, Incorporation of Company and Matters Incidental thereto. So when we talk about incorporation of company, what is the primary requirement? See, whenever you want to start a business, what do you need to start a business? The first thing required is an idea. An idea can change your life, right? So to start a business, the first thing required is an idea. After you have this idea that which type of business you want to start, post that what will you do? You will bring in capital, you will bring in other people along with you, and then take a procedure. You'll decide whether you want to start a sole proprietorship, a partnership, a company, LLP. After doing all of that, then begins your business. Correct? So, the person who gets this idea of forming a company, we call that person as a promoter. So, for a company form of organization, who is a promoter? The definition of promoter is given to us under section 2 clause 69. However, to understand the definition better, all you should remember is, in a layman's term, a promoter is basically a person who has conceived the idea of incorporation of the company, and he is taking all the steps for the purpose of incorporation of the company. But what is the definition as per section 2 clause 69? Let's understand. So when we talk about section 2 clause 69, section 2 clause 69 says 3 things about promoter. 1. A person who has been named as a promoter in the prospectus of the company. So if someone's name is written in the prospectus of the company as a promoter, then we will treat him as a promoter of the company. Second, who has control over the affairs of the company. So he is a person who controls how the company is working. So he is a person who has control over affairs of the company, either directly or indirectly, as a shareholder or director or otherwise. So not necessarily as a shareholder, he may have control as a director or in any other manner. And then finally, he is a person according to whose advice, directions or instructions the board of directors of the company work. So very three simple things about who is a promoter. One, he is named as a promoter in the prospectus of the company. Second, he has control over the affairs of the company either directly or indirectly. Third, he is the person according to whose advice, directions or instructions the board of directors of the company work. Very simple, very easy. See, whenever you are studying any definitions, this is one pro tip which I generally give my students, that whenever you are reading any definition, studying it, break it down into parts and then study it, because it will make your understanding of the definition very simple and very easy. So always remember this, whenever starting with a definition, break it down into parts and then study the definition. Now, there's one more point here which says that if a person is providing advice or direction in a professional capacity. Now, what does professional capacity mean? Professional capacity basically means if you are a chartered accountant or if you are a lawyer and you are providing advice to the company in that capacity, then in that situation, we will not consider him as a promoter of the company. I hope the definition of promoter is clear to everyone. Yes, is it? Let's now move ahead to section 3, which talks about formation of a company. Now, when we talk about formation of a company, what is the requirement? Minimum number of members. For public company, it is 7. For private, 2. And 1-person company, it is 1. And the minimum number of members criteria shall be satisfied in all the situations, in all the cases. And you should also remember this, that if the minimum member criteria is not met under section 3A, what will happen if the company is running business with less than the minimum number of member and 6 months have passed by doing this? Then in that situation, everyone who was aware of this fact will become personally liable for all the acts of the company which are done after those 6 months. Moving ahead to types of companies on the basis of liability. So as you all know, the company is divided into 3 types on the basis of liability: company limited by shares, company limited by guarantee, and unlimited company. Now, since we are revising, I will require a good amount of participation from your side as well. So whenever I ask a question, be very quick in answering the question, because since we are summarizing it, I cannot take it for a very long time. We'll have to finish this in a summarized form only. So whenever I ask a question, I would request all of you all to please answer and engage here in the chat. So 3 types of company: company limited by shares, guarantee and unlimited company. Now when we talk about a company limited by shares, what is it? It is a company where the liability of members is limited to the unpaid value on shares. Unpaid value of share. It is limited to the extent of unpaid value on the share. Then comes in company limited by guarantee. Now what happens in case of a company limited by guarantee? Here again the liability is limited. However, it is limited to the extent of agreed amount of contribution. Now you all tell me, what is an unlimited company? What is an unlimited company? An unlimited company, as the name itself suggests, is a company where the liability of members is unlimited. So very simple, very simply defined that what are the different types of companies on the basis of their liability. Moving ahead, now comes in one very important point, which is about 1-person company. So you tell me, what is a 1-person company? I want good answers here. What is a 1-person company? One person company is a company where there is only one person as its member. Now that is one very basic thing. The question here is who can become a member in a one person company and who can become a nominee in one person company. So for that, the criteria to be satisfied is the person should be a natural person, an Indian citizen, whether resident in India or not. So residential status is not mandatory, but the person has to be a natural person and an Indian citizen. He may or may not be a resident in India. Who is a resident of India? A person who has stayed in India for not less than 120 days during the immediately preceding financial year. So who can become a member or a nominee in a one person company? Natural person, Indian citizen, whether resident in India or not. And the other requirements with respect to one person company, what are they? The memorandum should state the name of the nominee, and whoever is being named as nominee, we will have to obtain his prior written consent. So obtaining written consent from the nominee is very important. Apart from it, if you have named some X person as your nominee and now this person wants to withdraw his consent, he can do it. And even if you want to change him as your nominee, you can also do that. So the nominee, he can withdraw his consent, but when he is doing that, he'll have to give a written notice to the member and must nominate the another nominee in 15 days. So when one person withdraws his consent, the member should nominate a new person as the nominee within the next 15 days. Then, member may change nominee at any time for any reason by giving written intimation. So, just like the nominee has the right to withdraw his consent, similarly, the member can also change the nominee at any point of time by giving a written intimation. Then, where the nominee becomes new member, then the new member shall nominate within 15 days a person as his nominee. Meaning what? If the nominee becomes the member, then in that situation he'll have to nominate some other person, and for that he has 15 days. And in case of withdrawal or replacement or becoming a member of the company, it must inform the registrar within 30 days by filing which form? By filing INC 4. So very simple concept about one person company and nomination clause. Now the memorandum of association has 6 clauses generally. However, in case of a one person company, it has one nomination clause as well. Now, a person can become a member and a nominee in only one person company, cannot become a member and nominee in more than one OPC. And if he becomes a member or a nominee in more than one OPC, then corrective action should be taken within 180 days. So within 180 days, he has to make sure that he remains a member or a nominee in only one person company. So that was with respect to OPC. Then we've seen the section 3A. The penalty here is the person who were aware of the fact that the business is running with less number of people, they will be severally liable for debts which have been contracted after those 6 months. So a very simple section. However, question can be asked from this section because this is a point which people generally miss upon. So do not miss this point. Now moving ahead to section 4, which talks about memorandum of association. Now memorandum of association is what? It is the main document of the company which signifies what is the objective and scope of the company. So when we talk about the memorandum, what is stated in the memorandum? It states the objective with which the company has been started, the name of the company, the place where the registered office of the company is situated. It contains all the details about the liability and capital of the company. So everything is given there. All of these things are given in the memorandum of association of the company. And whatever has been stated in the memorandum, the company has to abide by it. You have studied the doctrine of ultra vires at your foundation level, wherein you already know that any act done which is beyond the scope of the memorandum will be null and void. Can someone quickly tell me the name of case law which you have studied at your CA foundation level? I'll be the happiest person if you tell me the right case law. I do not have any incentive to give you right now, but yes, it is a memory check that if you remember the case law which was associated with the doctrine of ultra wires, which you have studied at your foundation level. I just want to see how many of you actually remember which case law have you studied there. Now, talking about the clauses of memorandum of association. So the first one is the name clause. As you all know, the name of public company should end it with the word limited, private with private limited, and one person company should have the terms one person company or OPC after its name. Now, there are certain restrictions regarding the name which can be used. So, the name of the company should not be very identical or should not resemble very closely to the name of any other company which is already in existence, because that will constitute an offense. Should not contain any term which is considered undesirable by the central government. But if it wants to use such a term, then it will first have to obtain approval of the central government, and only then it can use such a term in its name. Because what happens sometimes is, see, if someone is using words like national in their name, it generally gives an opinion to a person that this must be a government company. So that is the reason, to avoid those type of confusion from coming in, the government doesn't allow all of those terms to be used in the name of the company. Now, when we talk about name of the company, if you want, you can reserve the name of your company. The registrar may reserve name for 20 days from the date of approval based on the application which is submitted. This is for reserving the name of the company. And if you want to change the name of the company, and in that instance, if you want to reserve a name, then the reservation period would be 60 days. So, new company 20 days reservation, existing company 60 days reservation. Then, talking about cancellation of reserved name, if the company is not incorporated within that time period, then the reserved name will be cancelled and there could be some penalty on the person who has made the application. And if the company is incorporated, then give the company an opportunity of being heard. If the name is, was applied by furnishing wrong or incorrect information, then what? Then the reservation will be cancelled if the company is not incorporated. But if the company is incorporated, then the company first shall be given an opportunity of being heard. After that, it may be given direction to change its name within a period of 3 months after passing an ordinary resolution, or strike off its name or wind up the company. This can be done if the reservation has been done by filing some false or incorrect information. Okay, yes, I have the name of the case law here. Ashbury Railway Carriage and Iron Company Limited versus Mr. Rich. Very, very good. You remember the name of the case law, and I'm very happy about it. Moving ahead, the second clause is situation clause. Situation clause basically talks about the state where the registered office of the company is situated, name of the state is stated, and its official address. Object clause, another, the most important clause of the memorandum. It states the purpose with which the company has been incorporated, what is the object for which the company is incorporated, and any other matters with respect to that. The company cannot act beyond the object which is stated in the memorandum, and any such act is ultra vires, and this is what you have studied in the doctrine of ultra vires. Then comes your liability clause. Liability clause signifies the liability of members of the company. Capital clause states the authorized share capital, that is the maximum amount which can be raised by the company by way of issue of its shares, the number of shares in which the authorized share capital is divided, and the face value of each share. All of that is stated in the capital clause. Then comes the subscription clause, wherein nothing but the subscribers to the memorandum they sign and take one share each. Nomination clause is there only in case of a one-person company, wherein the member states the name of the nominee who shall become the member in case of his death or incapacity. Then talking about Section 5 talks about the Articles of Association of the company. So when we talk about the Articles of Association of company, they are nothing but bylaws or rules and regulations. Rules and regulations. They contain all how the internal management of the company has to happen. So that is with respect to articles of association. There were two case laws here as well: doctrine of constructive notice and doctrine of end-on management, which is also called as the Turpin's rule. So I'll not touch upon the foundation syllabus more right now because that is something which you have already studied at your foundation level. Coming to Section 6 tells us that the Act will override the memorandum and articles. So whatever is written in the memorandum or articles or any agreement the company has signed or any resolution which is passed by the company, if any of these go against the Companies Act, then what will prevail? The Act will always prevail over any memorandum, articles, or any other agreements which have been made. If you are going against the act will always prevail over it. Now coming to incorporation of the company. Section 7, the most important section here. Now, what are the steps for incorporation? Let's quickly understand all the steps for incorporation of the company. So, the first one is determine the nature of company. What type of company are you going to start? Public, private, OPC, company limited by shares, guarantee, or unlimited company. Then reserve the name by filing an application. Post that, draft the memorandum and articles of association and sign them. Submit the MOA and AOA to the registrar ROC. Obtain consent of the persons who are nominated as directors of the company. Submit all the statutory declaration and compliances, pay fees amount and stamp duty, obtain the certificate of incorporation from the registrar and file declaration about the address of registered office. That will be the last step. Now the form which is filed is SPICE Plus for the purpose of incorporation of company. So this is rule about who can sign the MOA and AOA in different situations. So when we talk about incorporation of company, there are also few declarations which have to be given. So those declarations should state that the company, the people who are incorporating the company, they have followed in all the steps for the purpose of incorporation, and the incorporation is in line with the Companies Act. Now what happens is once you file all the documents with the registrar will then check all the documents, and once he is satisfied, he will register the company and issue a certificate of incorporation for the company. Now comes in Section 8, another very important section. Questions have been asked from this section several times in examination. Now what is Section 8? Section 8 companies are special companies. These are also called as licensed companies. Why licensed companies? Because these are generally companies which run with some charitable objective. They have some purpose with which they have been incorporated, and they are the companies which are neither private companies nor public companies. They are the companies which have the objective of promoting commerce, art, science, education, charity, etc. Their profits are applied only for their objectives. They cannot distribute any dividend to their members, not allowed at all. So there's prohibition on distribution of dividend. And after granting license, an application shall be made to the registrar about the registration of the company. So these are special type of company, also called as licensed companies. Why licensed company? Because they need an approval from the central government before they start with their operations. Now, this application, which is made for the purpose of registration of a Section 8 company, it should be accompanied by the MOA, AOA. So, MOA is AOA are the basic documents. They will be there in case of every company. Apart from it, a declaration by CACS confirming the compliance with Section 8, estimated income expenditure for next 3 years, and declaration by each applicant. Now, this type of company may also convert itself into any other kind of company, but for that, there are certain compliances which have to be done. Like what? First, they'll have to pass a special resolution at their general meeting. Now, when a special resolution has to be passed, a notice has to be given. Now, this is a special business. So, for special business, they will have to give an explanatory statement attached to the notice of the general meeting. Form INC 8 with the regional director with the certified copy of special resolution. So after the resolution is passed, they'll have to file this form with the regional director, and then the company should also publish about all of this a notice, and they must have filed all their financial statements and annual returns, and there shouldn't be any due in filing all the financial statements and annual return. Now, when they make an application to the regional director, if the regional director is satisfied, then they will give the permission for conversion of this type of company. So, and when it is converted, it will get a fresh certificate of incorporation. Now, since we have understood that a Section 8 company requires a license to commence its work, if the company makes any contravention, if the company is not doing something as per the terms and conditions of the license, then the government also has got a power to revoke the license. Government can revoke the license at any point of time if they find out that the company has contravened the provisions of the law. And when when the government is revoking the license, what are the things they can do? They may do three things. One is they can order winding up of the company and transfer all the surplus asset to any other Section 8 company or the insolvency and bankruptcy fund, or change the company, convert the company and change its name, convert it into a public or private company, change its name, or amalgamate the company, that is merge this company with another Section 8 company which has similar objectives. So these are the things which can be done upon revocation of license of a Section 8 company. Now, as soon as a company is registered, it gets a separate status of a body corporate. Now, company, if it wants to commence its business, it will have to obtain another certificate which is called as the Certificate of Commencement of Business, and this will be obtained after the declaration is filed by the directors within 180 days from the incorporation, that every subscriber, they have paid the amount on the shares which they have subscribed to. Then comes in section 12, another very important section, which is about the registered office of the company. So every company within 30 days of its incorporation, it should have a separate registered office wherein it can receive all the communications from different people. So there has to be a proper registered office within 30 days from the date of incorporation. And this is where the company will send verification to the ROC of the registered office. So after incorporation, within 30 days, the company will have to send the details of the registered office to the registrar of companies, a verification of proof that yes, we have established our registered office. Now, when we talk about registered office, the name of the company should be displayed properly at the registered office. The name of the company should also be stated on all the letterheads and all of the other stuff of the company. If there is any change in the registered office, then the registrar shall be intimated within 30 days of the change. If there is any change in place, inform the registrar. Now, if you are changing the registered office and it is outside the local limits, it requires a special resolution. If shifting within the same state but to another ROC jurisdiction, then we will require the regional director's approval. Normally, RD's approval not required, but if the ROC jurisdiction is changing, if the ROC is changing, then RD's approval will be required. And for change of registered office within the same state but to another ROC, regional director shall communicate confirmation within 30 days of application, and company must file confirmation with ROC within 60 days, and registrar shall certify registration within 30 days of the filing, and if there's any default then there's penalty. So here's a very simple table which will help you remember that which permission and what type of resolution is required. So when we talk about change in the place of registered office, if it is within the city, what is required? A board resolution is required. If it is within a state, changing from one city to another, say Mumbai to Pune, so a special resolution is required. Again, within a state but one ROC to another, what is required? Special resolution, permission from regional director, and inform the regional director has 30 days to inform, company has 60 days to inform to the ROC, and then 30 days the ROC has to take the action. Then from one state to another, approval of central government is required. So in the previous situation where the ROC was changing, regional director's approval was required. However, here from one state to another, approval of the central government is required. So this is a very important part. Moving ahead. Now when we talk about alteration of memorandum, what is alteration? Alteration is basically making changes to the memorandum of association. If you want to change the name of the company, you will have to obtain the approval of the central government. If you want to change the name, obtain approval of the central government, pass a special resolution, then inform the ROC. After you do that, the ROC will issue a fresh certificate of incorporation with the new name of the company. I hope all of you all are understanding whatever we are doing right now. We are just quickly summarizing whatever you already know. Now, name change is not allowed to a company which has not filed annual returns or financial statements with the registrar. So, if there is any default in filing annual return or financial statements, then you will not be allowed to change the name of the company. Talking about change of registered office, this is something which we've already understood. But if you're changing the registered office from one state to another state, then what is required? The central government shall verify that all the creditors, debenture holders and other persons, they have given their consent and sufficient provision has been made for satisfying all the previous debts and obligations. So that is one important thing which is required whenever the registered office is being changed from one state to another. So this is one specific condition which comes in there. For changing the object clause, a special resolution is required through a postal ballot. And if the shareholders dissent, then they should be given an opportunity to exit. An exit opportunity should be given to the dissenting shareholders. If you're changing the liability and it is increasing any shareholder's liability, then we'll have to obtain the consent of the shareholder whose liability is being increased. If there's any change in the capital clause, it should be approved by passing special resolution. Change in capital clause we've done in detail in chapter 4. Now, just like MOA is altered, similarly the articles of associations are also altered. For that we require a special resolution. So very simple. For alteration of articles of association, you pass a special resolution. After you make the change, inform the registrar about what is the change you have made and your articles will be altered. And as soon as you alter your articles and MOA, you should update that in all the copies, whether electronic and or physical. So whenever you're changing it, you'll have to make updation in all the copies of your MOA and AOA. Now coming to section 16, which talks about rectification of name of company. Now, say if the central government later on finds out that a company has been already incorporated with a name which is very identical or similar to name of any other company which is already in existence, then what? Then the central government will order the company to change its name, direct the company to change its name, and for that it will give the company 3 months by passing a ordinary resolution. If and after the change, it must notify the registrar within 15 days along with the government order, and then the registrar will issue a fresh certificate of incorporation. However, if the company fails to comply, what will the central government do? Central government will itself allot a new name to the company. However, the company is free to change the name if it wants to. So, two situations where the central government will pass this order. One where it itself finds out, suo motu finds out that the company has been incorporated with a name which is very similar. Or the second situation could be where a person who holds a company or registered trademark which is very similar to the name of the company, and he is making an application to the registrar within 3 years of incorporation of the company. Only within 3 years. If he is making an application after 3 years, then no, his request will not be entertained. So questions on this have been asked for 4 marks in examination 2 or 3 times, wherein instead of 3 years they give you 5 years, 7 years, sometimes 2 years, and ask you whether the contention of the person is valid or not. So do remember these kind of situations. Then section 17 basically tells us that memorandum articles, they are public documents, and if you want to get access to them, you can make an application to the company, and the company will provide the copy of the documents within 7 days. Then comes about conversion of company. If you want to convert the company into any other type of company, file an application to the registrar. The registrar, after satisfying that the provisions applicable for registration of company have been complied with, will close the former registrations of the company. After registering the required documents, registrar shall issue a certificate of incorporation. So basic, just make an application to the registrar. Now, again a very important section which says that a subsidiary company should not hold shares in its holding company. So, you all know what is a holding company and a subsidiary company. So, this section tells us that a subsidiary should not hold shares in a holding company except for 3 situations. What are they? One is where the subsidiary is holding shares as a legal representative of a deceased member. It is allowed. Second, it is holding shares as a trustee, allowed. Third, it was a shareholder even before it became a subsidiary, allowed. So there are only 3 situations wherein a subsidiary is allowed to hold shares in its holding company. Apart from these 3 situations, a subsidiary cannot hold shares in its holding company in any case. Then comes in section 20, which talks about serving of documents, service of documents. Documents can be served to the company or any officer either by registered post, speed post, courier, leave it at the registered office, or by electronic mode. Then authentication should be done by KMP, any officer or employee of the company who is authorized by the board in that behalf. Execution of the bill, if the company has a common seal, then company may in writing under its common seal authorize any person as its attorney to execute the deeds on its behalf. If there is no common seal, then authorization shall be made by 2 directors, and if the company has a company secretary, then 1 director and 1 company secretary. So this was a very simple section. Question has been asked from this section 1 time. So with this, we have also summarized the entire chapter 2. I know it was like a full revision of the entire chapter. We have covered all the points, all the important points in this chapter, and I'm sure it was a very helpful session for all of you all. See, these kind of summaries help you recollect what you have already studied. We are not studying it right now. We are only doing a summary revision of the chapter so that you recollect whatever you have already studied. I hope all of you all have understood all the things which we discussed today. See you on next Friday, same time with another topic. So here today with this, Covered almost 8 to 10 marks of your syllabus, which is asked in your syllabus. Chapter 2 questions definitely come, and with this, we have covered almost 8 to 10 marks. So just imagine 45 minutes and covering 8 to 10 marks of your syllabus is not a joke. It is something really serious. So join us next Friday again. I'll be here at 7 p.m. next Friday with another topic waiting for all of you all to join. Thank you and see you on next Friday.